Good day. This is the Elliott Wave weekly update for the NASDAQ 100, being recorded on Saturday, September the 21st, 2024. I'm going to start with the NDX cash market, and I'm actually going to start here on the daily. And because what I'm really looking at is exactly really what has been confronting us from the July high. And that July high in the cash market was on the 10th. Let me just double check. On the 11th, it was 672. On the 10th, it was 690. So on July 10th, the NDX topped at 20,690.97. So we can actually say 20,691. And from that process and from that top, which I mark as a minor third wave, we're still within, according to this count. Again, so remember, I run two counts together at this moment. One is that the minor wave 4 is not complete yet, which I'm showing you right here in front of us on the cash market. When we move over to the futures market, it's going to be the other, which is that we did finish minor wave 4 here, and that we're starting in a minor fifth wave going up. Both have limitations on what they now have to do. So just as a word, because there's many of you who think that I'm presenting confliction and I'm presenting something, that I don't know which way the market's going to go, or, the accuracy of Elliott Wave. And that's not true. Elliott, during his writing, what he did pass on to other analysts was that as an analyst, always have a preferred and an alternate count. And usually your preferred count is going to have the more preferred pattern that the market is involved in. Right now, there are the two, the preferred and the alternate, that I'm presenting, but they have equal weighting at this particular moment in time, that either one can be shown as being the pattern that's in progress. So with that in mind, it's not me being indecisive. The markets are being indecisive. Now, you may take all the information that we've had a rate cut, we've got this, we've got that, and therefore the market should go up. I don't disagree with that analogy. But we have algorithms that are running on something much, much different. And as I continue to discuss, that is the options flows. And the reason that I've moved over and started talking about them, as an ex-market maker, I realize how big those positions have become, how big the options are trading in these individual indexes, ETFs, and then the underlying, the stocks themselves. And that's a lot of capital, and that's a lot of money being moved around on a daily basis. And each one of those strike prices and the movement carries, that position carries a Greeks that we talk about, the delta, the gamma, the theta, the vega, the different Greeks that then connect that options movement to the stock price or to the NASDAQ price, the index, or to the ETF, which would be the Qs. So we have all these different vehicles, and they're all in operation, and they're all moving every day. Then we've had an introduction, again, of zero DTE options. So we have an options expiration every single day, Monday through Friday, of some form, in the NDX, in the NQ, in the Qs, in many of the ETFs now. So then we have just regular weekly expirations, then monthly expirations and quarterly expirations, and all these different things. And it's just a way that the traders have come up with to add more things to trade and to work up until those points. And so with all of this in motion, things get what we call pinned. Where do they want to pin that price? Well, then we have to add volatility. So these are different things that are coming in that are not fundamental, are not going to be based on, some of them, let me take that back, they could be based on volatility, but that's just volatility. What is it, the fear gauge, or is it the speed at which something is moving? It happens to be both in my mind. If something is very volatile, if we're talking about somebody's personality is very volatile, as they're going from calm to very excited very quickly. Well, so is the market. The market's seeing volatility. It's going from no fear to big fear to no fear to sort of fear, just different things. And what gauges that? So it's going to be the volatility. And then what helps volatility? Well, then you've got what they call as VANA. So what is VANA? VANA is what happens to the gamma on a $1 move in the underlying, et cetera, et cetera. So they have different measurements, different models that measure all these things. But the one that really has come through is going to be your gamma. And gamma is really dictating to you what happens to your position if certain levels break. What happens to that gamma? Well, in the case of it's breaking down and yours happen to be short this gamma, your position is going to get longer. Your position gets longer as it's dropping if you're short, like a put. All right, so it's negative, and so you're going to start getting longer against you. And so what are you forced to do? You're going to be forced to sell. So things can really get going, and it has nothing to do with fundamentals. It has everything to do with these levels and what happens if they get broken. Now, they might get broken simply because of a number, i.e., after the interest rates were cut last Wednesday, we had a little bit of a delayed reaction because we had to wait till Thursday to really get that gap opening and just the run that we had on Thursday. That did carry over somewhat on Friday, but again, then we had expiration. So in any case, what really I'm adding in, and it does have an effect on the Elliott. Some things get extended, some things get a little bit, a lot of things come in, but the basic tenets, the basic principles of Elliott continue to function. We just need to add these different elements that could have a push on the market versus it's not fundamental, has nothing to do with the company. Quite often has nothing to do with the company. Has everything to do with how much money is sitting where and what position is. All right, so coming back to the NASDAQ on that basis then, what I'm presenting here is the position where the market is not completed or has not completed the minor fourth wave yet. So minor 3 ended right there on that July high at 20,691. So there is minute wave A. So what's going to be inside of a minor wave 4 is a minute wave A, minute wave B, and then a minute wave C. But this wave B may still be in motion. Or we could be complete here. And now let me explain that why. What we're still allowing for is the fact that we might get an irregular B wave. And what that suggests is that in going in the direction that we're going, that the B wave would go up and make a new high above the start of wave A, which at this point is 20,691. And so we have fibs that can be giving an indication of what normally can happen if a B wave goes irregular. And this wave, the C wave, so this would be minute wave A, and then this is minuet wave A, minuet wave B, and then we're minuet C, which could go up further than where it did. Now, getting back to it. So if we're counting this as a B wave, the B wave can then, so we have to just lower it. Still can be a B wave, but it's going to come on a different level, right? The minute B is now going to finish up here because we have minuet wave A, minuet wave B, and this could be wave 1 of C, and we're working through wave 2 of C. There's a potential that it's all of C, because you'll notice this fib number came in at 19,948. So first, let me take one step back. What we know about C waves as the most common fib level for a C wave is that it'll be equal to A. Well, if this is going to be the A wave and this is going to be the C wave of this B, then what do we have? 100% is 20,904. The second most common is actually that it comes in at 1.618, which pushes it way up here. This is a C wave as compared to an A wave. Now, if we were on a different degree, a different level, then it could come into play. Right now, not necessarily. So the third most common is that wave C will be 0.618 or 62% of wave A. Here's the A wave again. Let me just move that out of the way so that there's less confusion. This is wave A, and this is wave B, and now we're in that C wave. And we can count up 5 because previously I'm labeling this as a 1. and then we're coming down into 2, and we'll go back up in a third. But it's a 1 of a C wave up, or it's a 1 of a third wave up. Go over that again. When we get over to the future, you'll see that count. Right now, if it's a C wave, 1 of C, 2 of C, 3 of C, 4 of C, 5 of C. And then we could end up here, 1.236, 1.382. That would be for this B wave, but it would suggest it's irregular. So the most common Fibonacci levels in an irregular is 1.236 and 1.382. So wave B here, then as related to this A wave, comes in at 1.236, higher than this wave, A, or 1.382. It also tells us if it gets here and then starts to decline, what we can expect to the downside. Let's not forget, under this count, minor wave 4 is not done. If it comes out irregular, minor wave 4 in the B wave could go up and put a new high in above minor wave 3 and still come all the way back down into this zone. That's still out there, believe it or not. It's not disqualified just yet. But let me just tell you, there is one right inside here where this B wave may be here, and the C wave is coming in at the third most common, right? It did hit that. It exceeded it by a little bit, did create a new high above the B wave. Not by much, but it did. So if we had to, and I put a C there, what would the expectations be? That we come in on tomorrow or Monday here in the NASDAQ and the market gaps. Market gaps lower, suggesting ABC, now that B wave would move over, and we're coming down in the C wave, the larger C wave. So again, this would be marked in a minuet. And the B wave would actually go over here. So it would be A, B, C. This B would come over here. These would be minuet, A, B, C. And then we'd start coming down in a C wave. And we would mark it accordingly. The C wave, we would just throw a fib up, and that would show us it's likely going to come back down into the lower end of this zone. This is why I'm keeping that triangle or that rectangle on the chart. The orange box. It represents the fourth wave of one lesser degree, which under Elliott, if the minor 4 would come down into the price territory, if not towards the end of the price territory of the previous fourth wave of one lesser degree, and this is it. Here are the fibs that go along with a minor fourth wave. We basically didn't hit the first one. We did in the futures market, but we did not in the cash market. So again, another reason why we might still come down and then rally, to be determined. So that's this particular side of the count, that wave 4 is still underway. Two choices. We come in on Monday, excuse me, and the NDX gaps higher. That would suggest 1, 2, done. We're now going up in a third, a 3 of C. That would work fine. Then we start looking for this level or higher. These levels may still come into play depending on this structure. Most common, wave C is equal to wave A. That comes in at 20,904. That would certainly break that level of 20,691. If we get up there in 5 and we start, then it could be an ABC still with the C wave down yet to come. Whether I'm going to be able to count it as, and we'll go over to the future to discuss it more intensely, 1, 2, 3, 4, 5, well, I don't think it stops at that level. So we will be able to determine either way which is in force, but you can see why both have to continue until we've cleared all of it, one way or the other, all of it, one way or the other. So right now, under both scenario sitting underneath an alternate is that the minor wave 4 is still in progress. Wave A done. We're working on wave B. It either can stop here, and the signal would be that we gap lower and we just start and we break that trend line pretty dang quick. So something happens that forces the reversal. Like, rate cut be damned, and the market kind of comes down. Geopolitically, it's out there. It's out there. A major war between nuclear powers, it'll rattle the market. Initially, how long they want to carry it out, I don't know, but it could rattle the market too initial. So we'll see. So, but I would be looking for it. If that completed ABC and we're looking for the completion of the C wave down, then maybe we come down into here. Now, one would think if we're actually going to start a world war, that's not going to hold it. That could be too. We will review it as it happens. I'm just saying that right now, I believe the world maximum is sitting going like, we're just going up. Everything is looking great. The Fed's doing great. Our economy's firing on all cylinders, et cetera, et cetera, et cetera. And it's always something that you're not necessarily expecting that's sitting off in the corner and it just blows up. Doesn't mean that it has to carry out, but the market will react to geopolitical situations. So, yeah, that would be one. And then we'll, each time this, if should it occur, you get to review and look at what's what. So, again, that's that particular count. Now I want to go over to the other side, which is a more, I'm just going to use the term, bullish in terms of we should be getting more upside and a lot more upside. So let's go to take a look at that. First of all, let me just say, on the daily chart, we're looking at the moving averages. 200 flat, the 50's flat, the 20's, it's okay. And the 13 is climbing. The 20's got an upward angle. And right now, you can see they still stay flat. Slight upward bias, slight upward bias. So it's really got to go. If we're in the third wave, we're wanting these to be walking this thing up. Another thing, I have this trend line. This trend line broken on the downside, which means likely that we're not in the uptrend right now, that we are in that alternate, which is suggesting that wave C is what's in force, and we're coming down to finish minor wave 4. Then we rally again. Okay, now, moving averages, they're basically still aligned to go up, but they're not super strong. All right, going over to, which has been the case now for a while, I'm going over to the futures market. Same deal. I'm going to start here on the daily. And I got a little bit of too much stuff there, so I'm going to take that off so we can see it. And I'm going to take that one off. I'm going to see where this one goes to the upside, and I have another one that goes to the downside. All right, so we got both to be covered. All right, so we're looking right in here. Difference. Here we have minor wave 3, minor wave 4, ABC down, okay? Minute degree, fill the minor degree. We're going up in a minor wave 5, of which we've did minute wave 1, minute wave 2. So what did we finish here? And let me bring this down to the 4-hour and open it up again. So now we can go inside this start, right? So here we have it again. Minor wave 4 down there. Minute wave 1 of minor 5, minute wave 2 of minor 5, and now we're in that third wave, should be the longest and the strongest. We rise up in a, not the best, but still a clean 5. And that finished minuet wave 1, minuet wave 2 very quickly completed there, which puts us into minuet wave 3. Okay? So minuet wave 3 would suggest that we should at least get to 20,888 or 889, but more likely I'm going to be stingy and ask for more, which pushes us up above 21,000, which we need to do to get above this third wave high, the minor degree high. We're now in minor 5. I would expect it within the third wave to break above wave 3's high. It's usually how it works. So that means we need to get above 21,213. That was the high back on July the 11th, basis the December contract. We already know what it is. Over in the cash, a little bit different. So we're looking for it to get above all of that. And therefore, the third wave likely is going to come in above all this too. The minute third would equal wave one here, but again, we're usually looking for more. So the 21,700 level comes into play. This is the irregular. If I had to go back, right, that's why I'm leaving them there. I'm not saying that's what it is, but if this is minute, this is the B, and we're saying, the A of the B of the B, and we're coming up in a 5, we still can get up into there, be a head fake thinking that this is, the minor, and then something happens and we can flip them back down. I don't know what's going to happen, every day in the world. I don't have a crystal ball that tells me. So again, I'm telling you what the fib levels are and how they would fit if the market went up and then slipped and came all the way back down. But under this view, I'm not looking at that. I'm leaving them there because they will be resistance. But guess what? They could be resistance on this level, but we're here. And then that next level would be 22,900, but it can actually finish in between. So basically anything above here should finish. I would say we get up into here, and we just want more than 100% up to 618. So above 21,000 to 21,700, excuse me, be looking for that minuet wave 3 to complete. We put in a 4, and then we come up in a 5. Then we're looking for these levels to be met up to finish wave 3. And then we got a 4, and then we come up in a 5. And then we're looking that we could, again, we got minute wave 1, minute wave 2, minute wave 3, 4, and a 5. And again, that minute wave 3, yep, it could come up here. And we have additional. Those are not necessarily for the whole move up. Those are going to come from this level, and they should be up here somewhere. All right, so they're not, and I just got to go put them back up. And let me go out here real quick and put them back up. The last thing I just did not do, and I apologize for that, going to go in here, and I'm going to take all these off. And going here and here. And actually, I'll put that one up there too. Go over here. Come on. Say okay. Now, come on. Get it out of the stratosphere so I can take a look at it. Yeah. So this one is 20,008, and that's not going to work. So I'm going to edit. And I'm just going to take that off for right now. It may provide some resistance, but it's not going to be finishing resistance for the minor 5. So we're already looking for minor 5 to get up towards 23,000. If indeed that's what's in force, that's the potential that this has. I come back down here. So now you're seeing the importance of how this needs to follow through in a very strong manner. What we saw it build, that has to actually expand a little bit, because that's wave 1 of 3, wave 2 of 3. Wave 3 of 3 should just be go, 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 go. Now, again, we're sitting in a geopolitical situation. Your thoughts, can we disqualify that the market can turn and go do a face plant? No, we can't. So, but under the current count, under this one, we'd be looking for it to go. I'm going to pull out to the 4-hour, and we'll take a look. I'm looking for it to go. These are reference, and I leave them there because of the we have a strong potential that we also could just face plant and go straight down. You'll notice here, we were looking for this third wave needs to break this high, needs to get above this. The minute third needs to get above minute wave one, which sits currently at 20,255. We got up to 20,203. We're getting close. So in other words, 1, 2, that third wave needs to break above there and just keep on going. And I'll put it, if this is wave 2 and we gap higher tomorrow, then it's going to be more safe to put in fibs that are going to show where can this third wave get to. I'd really be looking for here or even higher for that third wave to get to. And I'm going to connect them this way. That low to that high down to wherever this low may be. And if that's it, I've just showed you. You're doing extensions. Then we'd be looking for these levels, and we're looking for more to get above 22,200. Because that's what this one is, 21,213. Need to get above it. All right, moving average is the same, but you can see how, at least in the futures market, they're all perky. Let me go back out to that daily. We'll just take a look at that daily real quick. Yeah, see what that actually is being a down day. It didn't pull away too far from the 20 getting itself above that 50, although it needs to work itself getting it higher, but still, it is above. And this one's now a little bit too tight. I'd like to see the market pull away from the moving average to give more strength to the moving average continuing higher and the whole move following through. All right, so that is actually going to be it for today. I think I probably talked enough. A quick look at what comes out next week. We have back to PMI. So on Monday, we have services and manufacturing from the S&P, and that's about it. Those are at 9:45 a.m. On Tuesday, we have consumer confidence in the S&P Case-Shiller Home Price Index. We do have Fed people out talking again next week. Not sure why, but maybe they're just talking up the cut and maybe what they're looking at, because it seems that all of them are coming out next week. Wednesday, we have new home sales. Thursday, initial jobless claims, durable goods, GDP. And then 1, 2, 3, 4, 5, 6, 7. Wow, next Thursday, they're all talking. Oh, all of them. I guess there are 10, but we got a lot of them all out there talking on Thursday. That'll be an interesting day. And then Friday, personal income, PCE. That's why they're all talking. They're going to have to defend the PCE. So we got all that coming out with consumer sentiment, advanced wholesale, trade balance and goods, etc. So it could be a big week. We shall see. In the meantime, the next daily update will be on Monday, September the 23rd.